China's real estate landscape is littered with bankruptcies, ghost towns, and homebuyers left in limbo. Now, with developers defaulting and numerous stimulus measures falling flat, what can Beijing do to rescue the sector? And what's at stake for the Chinese Communist Party as discontent spreads across the country? Now, to answer those questions and more, we have Victor Shih from UC San Diego's 21st Century China Center, breaking down how Beijing is managing the country's property market. Thank you very much for staying with us. How unique, or how would you characterize? I painted a pretty grim picture there, and again, please set it straight. But how unique is China's property market when you compare it to others in the Asia-Pacific region?
So I think by the kind of 2010s, the degree to which local governments relied on land sales income in sort of the overall local budgeting is quite extraordinary. Just looking at the case of Hong Kong, for example, of course, the Hong Kong government for years, received land sales revenue based on publicly owned land that it would sell to, different property developers. But Hong Kong had other sources of revenue as well, income tax, as you know, pretty low, but it still existed. So it collected income tax, collected, council sort of urban services tax, various kinds of financial transaction tax, et cetera, et cetera. In China, in other parts of China, I guess I should say, Hong Kong being a special administration zone, is treated differently. But in other parts of China, basically the central government takes, especially with the reform more recently in 2018, the central government now collects all the different kinds of taxes: income tax, value-added taxes, resource taxes, and consolidate in the hands of Beijing, and then it would transfer some of it back to different localities. So, but these transfers oftentimes are tied to specific expenditure. So in terms of discretionary spending, local governments just did not have its own revenue sources besides land sales. But that actually worked fine for a long time. So this discretionary revenue was taken away from local governments gradually, starting in 1994. And so by the late 2010s, local authorities hardly had any of their own revenue that they could control. But the land market was doing so well that they didn't see a problem in it, because they would just sell this land, billions of dollars. There are some costs associated with, getting the land ready for sales. But nonetheless, it generated a lot of cash flows. These local government financing vehicles could use this hypothetical value of land to borrow huge sums of money from the banks, and they siphon off part of that money for discretionary spending at the local level also. So again, there was this kind of highly leveraged but virtuous cycle where the land and property markets could support local expenditure. So when the music kind of stopped in 2022, this became a huge problem because, so the good comparison is Hong Kong. So Hong Kong right now, the property market is not doing well. No one's selling. Land sales probably is also going down a bit, or quite a bit. Property prices going down. But still, the Hong Kong government is operating on its own. It had a surplus from previous years and also collects taxes still, right? Other, various forms of taxes. So it can operate normally. This is not the case for many Chinese cities, which rely very heavily on land revenue. When the land sales literally dropped from, sometimes billions of renminbi to zero in the course of a few months, local authorities cannot issue salaries to civil servants. So in a lot of localities in China now, you're hearing stories, and even in some of the bigger cities, you hear stories that civil servants, teachers are not paid for months at a time. So we're not just talking about you don't get paid, your bonuses get taken away, or you don't get paid for half a month, which, by the way, could happen to my university. But that's a different topic.
Across the board there, Victor, across the board.
Yeah. Very, very different story there, but in the U.S. we've got our own problems too. But in China, in some of these smaller cities in China, it's quite severe. There's stories of civil servants, teachers not being paid for 6 months out of the year. Then you're like, well, why do they still go to work? Because again, in some of these smaller cities, you don't have a lot of options. The government is the biggest employer oftentimes in some of these smaller cities. And so even if you get paid 6 months out of the year, you still get free housing or low-cost housing, low-cost food from the government. That's still a very worthwhile proposition for a lot of people. But you do have this kind of governance crisis, which is caused by the sudden cessation of this virtuous cycle in the real estate sector, which has led to a complete collapse in land sales. And the land sales collapse is still ongoing. Even in places like Shanghai, where prices are picking up a little bit, they're still struggling to sell land. But especially that is the case in third and fourth tier cities, where zero land sales during the course of a year is still fairly common.
Yeah, I'm so glad. We've been talking about the property sector on such a macro level, and I'm so glad you brought up the people. And so I'd like to spend most of the rest of our conversation on that, on the impact, on the human impact there. But before we do that, let me pull up some statistics here. Now, even with China's property market in crisis, homes remain out of reach for most people. In 2025, figures from Numbeo show that it would take more than 37 years of median household income to buy an averagely priced home in Beijing, and 34 years in Shanghai by comparison. Now, this number is 19 years in London, 16 in Tokyo, and just 14 in New York. The stark affordability gap reveals why China's housing challenge goes far beyond the falling prices. So, Victor, given the collapse and, like you were saying, how the value of land suddenly plunged, why is the housing market still out of reach for so much of China's population?
Well, I think that is the case for tier one cities, Shanghai, Beijing, but actually in some of these tier three, tier four cities, it is getting quite a bit more affordable. So there is this trend where some young people, if their family has some money, instead of trying to fight and get a job that increasingly pays not very much, some of these young people would move to a small city, set up, a noodle shop or some kind of small business, and buy a much cheaper flat and sort of live in these smaller cities. This, by the way, is also a trend to some extent in the United States. So I would say in tier three, tier four cities, this price adjustment has gotten to a point where, some of these prices are becoming more affordable, especially to transplants from major cities. But in the major cities, yes, the price adjustment has not occurred to an extent that the price, these property prices would be affordable to most people. But again, I don't think that's such a big problem because of the demographic structure, especially in these big cities, where the majority of the population are people who are sort of 40 years or older who already own an apartment already, right? So you don't actually have large cohorts of young people from those cities who are trying to buy housing. And many of those people, even if they're trying to get housing, they're trying to form families, they will get a lot of help from their elders. And that's still the case. You do have some number, it's probably a large number, but not as a percentage, but some number of initially rural people who, because they went to a good university, are able to get good, decent jobs in the cities. Those people are still struggling to buy properties because the prices are still quite high relative to income. And in recent years, sort of sluggish income growth is a big problem in China, which the central government is trying to fix with various measures, but nothing is really working that well so far.
Mm-hmm. Yeah, you mentioned the China's demographic pattern and structure, and how it is an aging society, and there is a lot of focus now in encouraging families, young families, or people to marry and have families, and a lot of the young generation also says part of the issue is the housing, being affordability, being able to provide homes if they have families. Is there much correlation being drawn in China itself with what's happening in the housing sector and what's happening demographically?
Yeah, so there always was this kind of connection, and even in the early 2010s when I worked at a hedge fund, we were looking at the housing market in China. The demographic trends were very clear even back then, and people would ask, like, how is this sustainable? And we really didn't have a good answer, besides that, well, there was just a huge amount of financing available to all the property developers and local governments, and so they just kept on investing and investing. But now you do run into like these very fundamental structural kind of characteristics in the housing market, where on the one hand, you have hundreds of millions of square meters in housing stock sitting there idle. On the other hand, it doesn't look like there's going to be a lot of young people coming up, graduating from college, forming new families or new households that would generate demand for the housing stock, right? So you essentially had similar things happening in Japan, in the 1990s, and basically that forced Japan to stop building new housing stock essentially for a whole decade or longer. And so for many of these tier 3, tier 4 cities, that could be the case, where you just have very little construction because the population in some of these smaller cities are not growing. They're actually shrinking because most of the upwardly mobile younger people, they're moving to Beijing and Shanghai and Hangzhou and more dynamic cities like that. That is just a basic kind of mobility pattern that you see across Korea, Japan, Taiwan, etc., and it's happening in China. So in retrospect, it was quite irrational, 10, 15 years ago to build such a humongous amount of housing stock in some of these smaller cities, and also the infrastructure. And on top of that, you build a high-speed rail system, which made it easier for young people to leave their home cities to go to Beijing and Shanghai. So the transaction costs actually there are very good economics papers showing that this had an effect. Like when you connect like a smaller city with a large city with the high-speed rail, it led to economic damage for the smaller city because, people, talent would all just flow to the larger city.
Going back to the Japan example, in the way that we've seen Japan, how housing in Japan has deflated somewhat, do you think housing, the property sector, can still remain such a huge proponent of China's economy going forward if it's going to continue its growth?
No. Yeah, it can never go back to the days of the early 2010s just because all the cities were building massive amount of housing stock. Back in those days, all those cities are building a huge amount of infrastructure, but the population in the majority of cities in China are shrinking. And so, and then there's, oversupply of housing, oversupply of infrastructure already. You can't possibly justify building all this housing and infrastructure in so many cities. What the central government now is doing is to build these very expensive infrastructure in a select few places. So you do still have like these new subway systems in a few cities, bridges that are like engineering marvels, which means that it costs a lot of money to build in various places. The most extreme case that I've seen, actually, like these tunnels I think in northwestern China somewhere, like in Gansu and Shanxi province, this kind of 80-kilometer long tunnels being drilled. These are very expensive and contributes to GDP, but it doesn't generate local government revenue because these are mostly central government projects. and it doesn't contribute to that much employment either. So that's why you do have this weird juxtapose where China is able to meet the growth target in many cases. I mean, somewhat, because with statistical fudging as well. But then on the other hand, the employment, household discretionary spending is still quite sluggish because the investment is now very concentrated in these high value sort of investment, also in the industrial sector, like semiconductors and stuff like that. It costs a lot of money, but it doesn't employ a lot of people. It doesn't spread the money around to so many people, unlike in the previous period when hundreds of cities engaged in a binge of, housing construction and infrastructure. But that also meant that money got spread around to, hundreds of millions of people. Their lives all improved. That you get a sense that that's not so much the case in China anymore.
So you don't see one thing that can fill in that void that the property sector, the property slump has left?
No. Yeah, so there was, I would say there was some hope that, China's have these industrial policies, geared toward EVs and batteries and semiconductors. Again, the investment of it did help support the growth from kind of 2020 to very recently. But very quickly, the problem with industrial investment is that very quickly you lead to overcapacity, right? So it's great, you have BYD, building all these EVs, but then you also have Xiaomi, you also have I don't want to name names. I mean, there's some of the EV companies are very good, of course, but then there are dozens of others that are not very good EV companies. They're still producing cars. They're trying to undercut each other with low prices, more features for the same price. So no one's making any money. And at a certain point, it just becomes so irrational that even the central government earlier this year rolled out an anti-involution campaign. Involution, which is another word for overcapacity in the industrial sector, even the central government realizes that is going too far. And so then once these markets like for batteries, EVs, and even lower end semiconductors get completely saturated, the rate of investment will have to fall. And the contribution of this investment to GDP also will fall. So, I mean, in fact, I think that is the prognosis for China's economy, maybe not so much this year, but certainly going into next year, is that there's going to be some kind of slowdown because the housing market is not going to pick up to an extent that is going to dramatically help economic growth. And meanwhile, a lot of this industrial investment is going to begin to decline.